You log into YouTube, you see 10 different accounts posting how the stock market is going to crash and everything's on fire. And then you click into those accounts and you see they've been saying that for weeks. To the Money Making Market channel, where we are going to break down the charts to see when the crash is actually going to happen. The very first thing we need to talk about is the elephant in the room, and that is yields. Yields are the reason that there is so much confusion in this market right now. And today, it looks like the data that came out was a good sign, and we're seeing this cross down on the MACD, even about to pass the center line. But this is in a rising channel, and we have to think of the overall big picture. The Fed has come out recently and said, even though we're at a rate of 4%, we need to bring that inflation down to about 2%, which means they're going to most likely raise rates. And if 2 to 6 months of decent data isn't enough for them to start cutting rates, then that means that there's more work to be done. And I believe there's going to be a surprise somewhere in the near future with some kind of rate hike or something like that that actually causes the market to crash, but that isn't happening right now. Right now we are seeing yields are slowly starting to come down. We are probably headed towards the bottom of this channel, or at least the 50-day moving average on the yields. And what this is going to do, it's going to confuse a lot of people, because when the yield comes down, bonds will come up. And if you look at the correlation here, it actually plays out pretty perfectly. If this comes up and hits its 50-day, it is retesting this overall range-bound structure that it was stuck in for quite some time. And we've never gotten a retest of that. So I would like to see, and what my opinion is this is going to come up. We are going to see a retest of this area, which is a huge level of supply. You can see support here, we gapped above it here, and then we used it as support to go higher. We didn't quite make it here, but then we have support here, and you notice we gap below it, and that's what causes this turmoil to happen. So that being said, we do have a wedge structure here, so if you go into the smaller time frames, you'll see a nice little divergence on this, and you can play this to the upside. Hopefully you did, and hopefully you're making some money. Now, the reason I want to look at this is because if I say that this is going to come up and retest, and I also say yields are going to drop, that means very good things for tech stocks. And the one that I wanted to present to you was Apple. Now, Apple has seen some crazy stuff. It's broken out of this rising wedge, and I thought, and this is where I was wrong, I thought we were going to hold at this structure and maybe create a little bounce and then go, like fill a gap and then keep going. Instead, we just kept going. And the cool part about this is, I don't know your trading style. I don't know your strategy or anything like that, but my strategy involves a 2 hour sometimes. And right here, this is a perfect setup for my style, which is I wanted it to see a bounce here with a nice short squeeze on a shorter time frame. It didn't really happen. It kind of fizzled out. And now we're coming down for the second dip, and on the second dip, we are seeing this skyrocket. Now, as you can see right now, if you took this trade right here, you would be going up. This trade is a little scary because you are below the 200-day moving average on a 2 hour scale, but most likely we are going to come up and touch this right here, which it lines up perfectly again. So what I'm going to say is we are going to see a slight bounce in stocks, and the cool part about this is everyone is paying attention to, let's go back to the daily, everyone is paying attention to this. I had this drawn out as a scenario. I drew this line somewhere around in here about 2 to 3 weeks ago, and I drew this line right here just to give myself a nice reference point. I really didn't see too much support there. But what I believe is going to happen, everyone and their mom is looking at this left shoulder, head, right shoulder, and saying, okay, this thing is going to come down. And that might be where you see the reaction here of this retest. But the thing that would fake the market out the most, we have yields that are going to come down for a few days. We have all kinds of things that are telling you that stocks maybe even will go higher, if not at least testing these areas. I'll tell you my opinion in a second. But we do have a crossing on the MACD. We have a buy signal on the SPY. We have all kinds of things that are telling you this thing's going up. We took back the 9-day. We took back the 20-day. We took back the 50-day if this closes. Most likely, the most probable thing from my perspective is this is going to come up. It is going to most likely test this 453. This could be where it fails because in a few days we have jobs numbers coming out, unemployment numbers coming out, I believe. But I think these three lines are a very good indication of where the stocks will go. Now, it's how bad do they want to fake people out? Do they want to say, boom, do people start saying all-time highs right here? Maybe that's when you look in the smaller time frames and say, this thing looks unhealthy. Are they going to say it here? Are they going to say it here? Most likely, I think we come up into here, we bounce up, maybe we test one more of these lines, we see a nice little hourly divergence, and then everything will be pulled. The rug will be pulled. Your trap is set. Now, who's to say? What if this just goes sideways all the way until earnings and then we see the pop? You never know, but you want to be paying attention in real time to see what's going to happen. Volatility has not 100% come back into this market yet. Excuse me. So pay attention to what's happening in front of you. And right now you are seeing all kinds of stuff. And if you take a bearish bet right now, you can get completely demolished in your account. You can get demolished if this thing just goes up for 2 days. The premium on yours will destroy you. So pay attention to the smaller time frames. Look at these types of areas. I personally see this right shoulder going a little bit higher. It still would probably be considered a right shoulder even if it's all the way up in here. The most surprising scenario I think that could play out is we see a retest of the high and we see if people are serious about that. Maybe we even see a fake out and then we get a wick and it comes all the way back down, we crash, and so on. So just be aware that even though you're seeing crash everywhere, everyone's saying crash, stocks are most likely going to go up for the next few days. That being said, you might want to pay attention to what's down the line. But first, let's go into the cues and just see if there's anything different. Once again, we drew our little reference point. As you can see, it broke through it. This might have triggered some people to get caught up and say, oh, it's going to crash. And then it pulls right back. And then here's your pullback. Maybe it's just a slight ABC pattern up to test these areas here. I have a bunch of lines. Most of them mean nothing at this point, but I would say this one here is something we could retest. If we break that, I would be looking for the gap fill here, and even the actual high is what I'm looking for at that point. I believe that if it does get past all those points, there's no way we're not testing that high. So pay attention to what's happening. You are getting a buy signal, and this is most likely going to test all of these levels, if not just one of these levels. Right now, the scenario for me would be it's going to retest this and then crash down. And that would actually lead pretty well into Friday's numbers. So depending on how far this rips, if this thing keeps going, then you're going to start to look at those and be like, okay, we are overbought on some pretty good time frames. It's at least going to need a pullback. It's not the worst area to take a short bet. Let's conclude with this. Rates are coming down, but they're in a channel. That means that those rates probably are going higher. Why? Because inflation is still at around 4%, and they need to come down to 2%. And if we have that amount of decent data, and they're still saying and prepping you, saying we are going to most likely be raising higher, and you're going to see those percentages of the chance of them raising go up and up and up over the next few weeks, they are going to continue to raise rates. We are going to see those yields start to turn back up. We're going to see TLT most likely come down and test that around $88 level, which if you're an investor is a great level to acquire bonds. And we're going to see what happens from there. Most likely, we are going to see that big downturn, and then we're going to see bonds start to rip as people flee to bonds for safety, and we're going to see that yield start to pull back down. But what you need to pay attention to this week is those yields are going to come down most likely for a few days. And if they hit the bottom of that channel, I want you to go into those smaller time frames, make an assessment for yourself, and then do what's best with your money, whatever you see fit, however your trading style works. I hope that this video in any way was helpful. It's one of my first ones, so please comment, let me know something you would like me to go over in the future. I know it's short and sweet, but hopefully my point got across that stocks can go higher before there's a huge downturn, and you don't want to get caught in that trap because literally 2 up days can ruin your account. So hopefully this video helped, and I would take any feedback, any kind of stock you guys want me to look at. Please put it in the comments and subscribe if you thought it was helpful. Peace.